One of the most popular questions that I get asked by my clients, and I'm starting to get asked here on this channel, is how many credit cards is too many credit cards? We're going to answer that today in this video. I'm going to give you proper context on how many credit cards you should have, because this is very subjective, and I'm going to give you a basis to understand how to know when you're reaching your limits or how to know when you don't have enough. So we're going to talk about it right now. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So, how many credit cards is too many? Well, there's a handful of ways to sort out if you have too many credit cards or if you're on the verge of having too many credit cards. Let's quickly demystify what credit cards are, what their purpose is, and where they fit in your financial picture. Credit cards are basically financial products intended for convenience. They're intended to help give you the convenience, efficiency, and safety in spending your money. That is generally what credit cards are. You basically have an opportunity to leverage another entity's money to cover your spending, and you have a 30-day window of time to stretch it out to pay it in most cases. And it's usually safer, it's usually more effective, and it keeps you from having to walk around with cash, and it gives you a little bit of a stretch on cash flow throughout the month if you need it. In more modern times, credit cards have become very heavily incentivized because banks have figured out a way to make great money on credit cards without having to charge you to get it. So they start to give you all these features, benefits, and points rewards to incentivize you to spend your money on credit cards, purchase protections, and so forth. So generally speaking, credit cards are a product of convenience intended to make it easier, safer, and more effective for you to spend your money. When it comes to understanding the best use cases for credit cards, you need to understand where your financial picture is. You need to understand your spending in particular. Your credit cards need to be deciphered by building credit, spending safely and effectively, and getting as many benefits and perks as you can get for money that you're already spending. So what does that look like? Well, for many of you, you have tons of day-to-day expenses. Many of you do. We all do. We have day-to-day expenses, week-to-week expenses, or month-to-month expenses. If any of your spending falls in these categories, then that means there's likely a credit card on the market for it. What you're looking to do is, first off, how comfortable are you and how much do you understand credit cards? Because that's the most important thing. It doesn't make sense to go out and follow all of these different mythical strategies and application hacks to get all these credit cards if you don't really understand how to use them and make them fit for yourself effectively. Because one of the number one debts that consumers have is credit card debt. So you have to be very conscious about this. Now, when it comes to building credit and building your finances, most lenders are looking for you to have 10 or more trade lines, primary trade lines on your credit report. One of the most effective financial products to stack up is credit cards. Now, obviously, you can have multiple auto loans, you can have multiple personal loans, you can have multiple home loans. But the reality of it is one of the most accessible and most frequently used and valid use cases for products to stack up primary trade lines on your credit report is credit cards. So this is typically going to be one of the number one ways that you're going to want to have the appropriate amount of credit cards. And that appropriate amount is not 0, it's not 1, and it's often not 2. You need multiple credit cards in most cases to show a responsible use case on your credit report and to develop a healthy credit score. So this is one metric you can use to determine how many credit cards you need. At a baseline, I would recommend that almost anybody has at least 3 to 4. You can't even get some home loans unless you have at least about 2. You need multiple revolving accounts that are usually of a year or 2 old to at least get into basic home loans and other, lending products. So that's one threshold you can go off of. The next is break out your spending categories: groceries, gas, dining, travel, you name it. Any other miscellaneous streaming services, there's a credit card for each of these different spending categories. Literally, there's a credit card for that, right? you need to start breaking out your primary spend categories where you're spending an effective amount enough to be able to get back great points rewards while building credit and giving yourself the safety net of purchase protection on a lot of these different credit cards. So this is another major way to break down. Okay, you got number one, how thick does my credit profile need to be based on my financial goals? Number two, how many spending categories do I have where I spend enough money to justify having a credit card? And then number three, you need to find out what your discretionary income is and your income is. You're going to be able to tell if you have enough credit cards or if you're getting out of your league when you cannot afford to pay these credit cards off in full every month. This is another threshold you need to keep in mind. If you can't afford to pay off what you're spending on a monthly basis, you don't need it, period. You understand what I'm telling you? All right. So the next one is you got credit profile and financial goals, spending categories. Can I afford it? The next portion of this is income again, but from a different perspective. The next version of this is my DTI, my income when it comes to my application, my debt to income ratio. Your DTI is what's going to next determine how many credit cards you need, because you're going to literally have a limit or a hard stop of being eligible for credit cards or limit increases once you have a broad enough available credit versus your income or your debt to income ratio. So to make that make a little sense, or to put that in a little bit more English for you, basically what I'm saying is lenders are going to want to only lend you so much versus how much discretionary income you have. So that means the monthly amount of debts reporting on your credit report versus your gross income. Once lenders see that you're starting to get into this red zone where more of your debts are catching up too close to your income, they're not going to want to lend you any more money. So when credit card applications and automated underwriting systems and human underwriting systems are vetting you for credit cards, you need to have a reasonable enough gap versus the amount of available credit you have. So as to say, if you make $50,000 a year and you're showing an equivalent of about, $20,000 in expenses over the course of a year, then you can suspect that you're going to only have so much available credit offered to you based on that. Lenders are not going to want to see you beyond 20 or 30% of your gross annual income, especially in respects to your debt or your existing monthly expenses. So that may or may not make a lot of sense to all of you, but what I'm basically saying is you need a big gap between, or you need to at least gauge how many credit cards you have and how much available credit you have by your income and your debt to income ratio. This is going to give you a clear-cut picture, because trust me, if you get too close to it, lenders are just going to start denying you. And this is when you're going to know I got too many credit cards, or I'm at my limit on available credit until my income increases or my debts drop, or both. So quick recap, you need to gauge by building your credit report out, having as many trade lines as you can afford to have based on your financial goals. You need to check your spending categories. You need to check your income. Can I afford to pay these off? The next one is I need to check my income, because I need to make sure that I have a high enough income versus how much available credit I'm trying to stack with these credit cards. So hopefully that all makes sense to you, but it's all subjective. Your individual results and your individual needs are going to vary. Some people have dozens of credit cards, and some people have absolutely none or one or two. You need to have a responsible borrowing history. So I recommend you have at least a couple to a few, but you need to start using these 4 metrics to determine what a couple to a few is. You understand? All right. Thank you all for tuning in. I enjoy bringing you this content. This is JP from Blueprint for Prosperity checking out. I want y'all to stay focused, stay in motion. I'll see y'all soon.